Hello everybody, welcome to the webinar. We'll get started at this time. Before we get going, I just want to do a quick systems check. Type OK in the chat box if you're seeing my screen all right and hearing me clearly. Okay, great. Looks like we're up and running. Thank you. I apologize. Yesterday I had to move the webinar time from yesterday to today. I had quite a cold, still do a bit, but my voice wasn't able to carry more than a few minutes conversation without breaking up yesterday. So I've got my hot tea now, and hopefully I make it through the whole session. We may do a little bit of a condensed version today, but I think all will be okay. Okay, so we're going to focus not just on cryptos today because we had a session earlier in the week that had some technical difficulties where I was going to go over some stocks with some fundamental news. And due to some unforeseen technical difficulties, we weren't able to run the webinar on Tuesday. So Tuesday was messed up for technical reasons, and then yesterday was messed up because of my own health. So today we're gonna breeze over some of the crypto movements and the general ideas going into next year. What maybe to look out for, what some opportunities look like potentially, and then we'll also take a look at some stocks because the earnings numbers, a bunch of them came out last month. And some of those are quite interesting to look at. And it might be new to some of you to know how to look where the earnings reports are and how to maybe make a judgment as to what an opportunistic entry point might look like based on the most recent reporting numbers from those companies compared to entry points on the chart. So we'll take some time to do that as well. As we get going, as always, keep in mind all investments have risk. No one trade or no one investment is guaranteed to be profitable, no matter really what you're investing in. And that holds true with trading with CFDs, Forex trading, spread betting, options. Certainly risk is involved. As we can see there in the slide, something like a third or so of all traders with AvaTrade are able to make a success of it long term and be profitable on their accounts. Others either don't follow risk management at all and blow their accounts quickly, or maybe have a decent method but slowly lose to the small spread and overnight interest rate because they're not beating the market by enough consistently. And so the whole point of being here, coming to the webinars, is from an educational perspective to learn, improve upon hopefully your win percentage or your P&L bottom line so that you can be of those 30% or so that in the long term can make a success of it. And actually, you know, people talk about when you're using leverage how risky it is and that sort of thing, and it does increase risk. But at the same time, to know that something like near 30% of people, and usually those are the ones taking it more seriously, right, are actually able to have good success. That actually I view as a positive note because hopefully you can picture yourself as being in those 30% because you're taking it seriously. You're taking in some education and working on a real trading system to hopefully have long-term success. Now, one thing, I don't know if you all have noticed, type yes if you've used the Alphago mobile app. The Alphago mobile app. Type yes in the chat box if you've used it. Okay, the Alphago mobile app is created by AvaTrade. You can log into your trading accounts just like you would from the MT4 mobile app or from the downloaded platform on your PC. But the Alphago mobile app has a special feature that is only offered by AvaTrade and only available through that mobile app when you're placing your trades. Many assets, all FX, gold, silver, have this protection feature called Ava Protect that is available through the Alphago mobile app. And what it does is it allows you to choose for a flat rate periods of time, like 1 day, 2 days, etc., of coverage, so that if you lose, doesn't matter how much on that movement, you get all that money added back to your account. Any negative floating that was lost during the covered time period. And it's for a flat premium, you could call it. And your profits still are, the same as they would minus the premium cost. So it's a nice feature. If anyone has any questions about that, let me know. And maybe I'll allude to it a little bit later when we're on a chart or two to explain to you how it could be beneficial. Could maybe work into some of your trading systems. Now, keep in mind what we cover here, like I mentioned, is educational in nature, right? It's not to be taken as financial advisement. I'm certainly not a financial advisor, but I am someone who's worked with literally thousands of clients and seen a lot of what has worked well and a lot of, frankly, what has not worked well with different strategies. And so sharing that information many times can be helpful for people. So let's take a look. We'll go first to my demo account here, and we'll take a look at some movements that have occurred. Now, this is Apple. It's interesting to look at, and I wish we'd have had the session earlier this week. It could have been an easy profit here in the last couple days that we're actually moving, the 26th being the last day of climbing here. But the earnings numbers alluded to the fact that likely might have been what was going to happen. We'll get back to that. I wanted to show you real quick before we get into the cryptocurrencies. We've got gold moving here. It's had quite a climb. And if we go back, we were looking at it earlier in the week with gold, and we saw the breakthrough movements here. And we even drew some lines down here how you could have made profit with buy stop pending orders on the breakthroughs. And so this was the first line of resistance and a breakthrough here. And buy stops allow you to put pending orders to buy from a higher point. If it reaches that point, it enters as a buy. So a buy stop right above this resistance level, when it broke through, would have paid nicely. It climbed. Then it formed a new resistance level. And we were talking about how you could still continue as there was upward momentum on gold, that if it broke this resistance level as it came up, there's another breakthrough candle, another buy stop could have entered. And look how many times this worked over the past week or so. Resistance level, breakthrough, buy stop would have paid well. And then another opportunity was here. Resistance level formed, breakthrough would have paid well again. Okay, so there was like 1, 2, 3, 4 opportunities for that type of strategy where if you saw upward momentum in the asset, in this case gold, and you want to take a shot at those breakthrough pending orders with buy stops, basically waiting for the breakthrough as confirmation of further upward momentum, they paid well this past week. I had a number of clients that were looking at trading on gold, and boy, it climbed well for them. And so a lot of folks heading in through January expected gold to push up, and it looks like it did well for those who were thinking that. Okay, so in any event, let's go back, take a look at some cryptos, because I know that's the title of today's webinar, and we should have a look at what's happening. I think it's interesting, and I want to look at more of a bigger picture view going into next year, but we'll look at some of the smaller candles as well. If I look at, let's say, 30-minute candles, we see it's kind of consolidating and moving sideways for the most part on Ripple. And if we look at Bitcoin, similar. Okay, tried to spike up, back down, kind of. Here's the consolidation sideways with your typical crypto opportunities that arise. Boom, breakthrough on this resistance would have paid well. Okay, resistance, 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 just kind of ranging up and down. And so an easy move on that is to put a pending order above the resistance. If it breaks through, boom, there's your typical breakthrough candle, just like we saw in gold. Okay, so there's nothing magic about this. This is a very simple way to trade with pending orders. When you see a market that's moving sideways and ranging, forming resistance and support, You could trade on the breakthroughs, and there was the breakthrough, there was the opportunity. And it went all the way up to where you'd expect the next resistance level was here. And that's about where it hit and then reversed. So your get in point was easy to predict, breakthrough candle, get out point just before the last high point over here on the resistance. So pretty simple strategy. Now it's come right back down into this ranging movement again. So we already know from the recent history now that this ranging movement has the potential to break through and come up all the way to 77,400 or so. Okay, so what we've seen happen in the recent past many times can help you predict what you think might happen in the future. It's no guarantee of it, but it can give you an idea of the likelihood. So I see no problem with setting up another pending buy stop up here. And if it breaks through this resistance level again right here, I could be in on another buy with what that was 150 climb or so. Okay, in a pretty short period of time, a couple hours time. The last time it broke through, it went up in a few hours, $150 in the price of Bitcoin, which if you've got a decent sized position, that can pay you nicely. Okay. And you don't have to sit and wait for it. You can set your pending order up and walk away. If it doesn't go up and break through, fine, no problem. If you were doing a pending buy stop up here, trying to see if it might mimic this movement here and this movement here, which has happened once, twice already in the past week, where might you put your stop loss if your entry point on a buy stop was up here on your pending order? Yeah, I'm with you guys, probably back below the resistance, right? Stop loss might be back down here below the resistance. If it breaks through, triggers your buy. If it truly is going to do what it did last time and go running up, then it shouldn't come back down below the support. If it does, then maybe you have a stop loss down there with limited risk. In this case, you'd have to risk maybe 1/4 of your potential profit. Okay, with that type of setup. There are other ways you could set it up, obviously, but that's an option. Now, so we see this type of ranging, not just on Bitcoin. We see it on Ethereum, right? Here's the breakthrough, easy pending order, would have paid really well. Resistance, resistance. You just take a shot with a buy stop up here and look what you would have profited potentially there. Okay, very nice. It could happen again. Okay, it could happen again. Pending orders help wait for momentum. And that's what you saw here with this movement. Many times you can wait for that momentum. So I see some opportunities on the high side that if they arise could potentially pay well. But you also could be looking on the downside. And if we go to, let's say, 4-hour candles, we can see if it breaks the support down here. Okay, if it breaks this support where it's ranging up, down, if it breaks the support, where's the next support level? It's down quite a ways, down here. So you've got quite a substantial potential drop to the next support level if it breaks the current support. So you not only could be preparing potential buy stop moves, you could be preparing sell stop moves if this even greater support level gets broken. Okay, so the market's getting pinched right now. It's moving sideways. And so a lot of times when that's happening, you don't have to try and guess the market, right? Sometimes it's better to trade smart rather than to try and be right. So pending orders give you that opportunity to be able to set up on both sides of this small ranging movement for the potential if what we saw there on the 30-minute candles happens again, this type of breakthrough, large potential profit, or if in the bigger picture it breaks the support, you've got potential profit on the downside as well. Any questions on that? I'll go ahead and pause for a moment. Okay, I don't see any questions popping up. If you would, I want to make sure the audio is still running properly. Just type OK if you're still with me, still hearing me all right. Type OK in the chat box, please. Okay, I've got enough responses. Thank you. All right, so what if we go to an even bigger picture view, like 1 week, to look at what about the outlook for the new year, rather than looking like what to do in the next hour or the next day. You could set up with some ideas about bigger picture movements as well. And just looking at this screen with Ethereum, I'll take a little vote. Do you feel like that looks like an opportunistic entry point for buying or selling? And I'm looking at on the screen, I'm looking at how low it's gotten in the visible history and how high it's gotten in the visible history. And where do you see a bigger potential for upside? Patience, I kind of agree with you. Maybe it's a better buying opportunity in the bigger picture if history was going to repeat itself, right? Always have to qualify that, but trading is always about potential, right? It's not about knowing for sure what's going to happen. So what's the potential here for climbing of this asset if you compare it to the recent history compared to the potential to have further dropping? And I see maybe a 10-to-1 ratio on this screen where the potential, if it went back to where it's reached in the past, could be way up here, right? We've seen it as historical potential. And the potential dropping maybe is on the screen. We don't see any lower than down here. Okay, so there are some concepts here where if you got in on a buy in this case, if that's what you're thinking, just below the major support level that exists now, you could hedge yourself, right? You have a sell stop. Let's say you got in on a market buy now. I'm certainly not saying you should do that now, but if you did, you could set up a sell stop just below your entry point. If we zoom in a bit, maybe entering down here, that if it broke below that point, whatever size you're in on a buy, you're hedging on a sell until in the bigger picture it comes back up, until you're confident of the rise again. It's one way to go about things if you don't like to use stop loss. It's another option. Type OK if you're with me on that idea that maybe there's more upside potential on some of these assets now rather than downside, and that you don't necessarily have to be in it for a quick in and out. You certainly can be. Some of the examples I gave you here, these are like 2-3 hour moves and you're in and out, and that's great. And I'm always a supporter of trading with different types of trades, scalping in this case here. And in the case of looking at the 1 week candles, longer term projections maybe that you think make sense. Okay? And if anyone's confused by when I talk about potential hedge trade for longer term type moves, let me know. I'm happy to expand upon that idea. But we're looking at Ethereum. It looks similar. 1 week candles. Huge potential if it repeats what it's done in the history. Bitcoin. Very similar. Little lower basement still available, right? So this one maybe doesn't set up as nice for saying I think there's only large upside and not downside, because look, Bitcoin was way down at 2,769 where I drew this line not that long ago. So Bitcoin certainly has a lot more room to drop compared to what it's done in the recent history than Ethereum did in the screen we were looking at. So almost see equal opportunity for rise and drop here with Bitcoin, right? So again, then you go back to trading smart, not trying to trade right. Use your pending orders appropriately for entry points where you feel there's confirmation that that is the movement that will continue. Okay, that's where your buy stops and sell stop pending orders come in. And those of you that have never found the pending orders, you have the order window. You just switch from market execution to pending order. And you've got 4 types of pending orders here. Okay? The buy stop and sell stop are the ones we've been talking about so far. Those sell stop, you program it to sell from a lower point, waiting for it maybe to break a support level to confirm a downtrend. Buy stop opposite, you program to buy from a higher point, waiting for it maybe to go up through a resistance level to confirm an uptrend. The limit orders, buy limit and sell limit, are the opposite idea. Buying from a lower point and selling from a higher point. And we can get into that if we find an example that's appropriate. With that said, we can go back to gold for a second. And I mentioned about AVA Protect when we first started. Remember, AVA Protect is available through the Alphago Mobile App. So download it onto your mobile device, and if you log into your trading account through the Alphago Mobile App, same account number, same everything, you have some additional tools that are available that you won't see with any other login source. So the Alphago app has one of the tools that I want to describe is AVA Protect. Okay, AVA Protect can be found in the Alphago app, and it allows you to add protection for defined time periods on certain assets that you're trading on. So gold happens to be one that it is available on. When you open the order window, if you see AVA Protect pop up down where you set your stop loss and your take profit settings, then that means it's available on that asset. And so if let's say you're going to use it on gold, which it is available on gold and silver, along with all of the FX, let's say in the bigger picture, you felt gold was going to climb further. Okay, I'm not saying you should think that, but let's say you did think that you thought gold would climb to this high point up here, 1557. Okay, remember we're looking at 1 week candles now. Let's say you felt it was going to climb to 1557, but you were afraid of the downside risk because it's climbed so much already. You said, man, I'd like to get in on this over the next few days that I think it's going to climb, but I'm afraid of the pullback risk, right? So that's where it could be a situation where you're setting up, in this example, maybe a buy trade at a certain spot. You decide to do a market buy, and on the downside, instead of putting a stop loss, you could choose AVA Protect and choose 1 day, 2 days, etc. of coverage, so that no matter how far it went the wrong way, at the end of that covered time period, no matter how far negative it was, if it pulled all the way back down to this next support, even all of that negative gets added back to your account when the covered period ends, and then the trade's left open. You can manage the trade from that point with the negative floating, knowing that negative floating really was added back to your account already because of the coverage, and you could choose to put a regular stop loss at that point or manage it in some other way. You also, with that type of protection, if you choose to close it early, you can, and it'll add back any negative floating. You don't have to wait to the end of the covered period to collect on the coverage. And if in the best of all worlds, it went the right way, went all the way up to your take profit, then your only risk or cost was the premium cost. That's a flat amount that it shows you as you're opening and setting up the protection. Shows you how much that cost is right from the start. And it could be a pretty minimal cost sometimes, depending on how volatile the market's moving, which asset you're looking at, etc. Okay. Any questions on that, on AVA Protect? And I can show you where to download the Alphago app, right? Because you need the Alphago app to use AVA Protect. So the Alphago app, if you look trading platforms on our main website, you see AvaTrade Go. That's it. Follow that link from our main website, and you can download the AvaTrade Go mobile app, and then you'd have access to the AVA Protect, and you could check it out with all the FX, gold, and silver investments. You'd have the option to use that. Okay, so what we could do, let's take a look. I want to run through now how, if there are no questions on what we've already covered, I want to run through some stocks, one or two, to give you the idea of how to do this. Recently, Nike, and by the way, you can find under trading info, earnings releases, this page on our website that shows you upcoming earnings releases. Okay, so Alibaba, January 28th. These are going into next month, next quarter. Let's look at some that already occurred. Okay, I know Nike just recently had an earnings report, and so maybe we go to investing.com. There are other places to look at earnings numbers, but let's go here. And you see on investing.com, one of the choices here is earnings calendar. Okay, so earnings calendar. And then when we're on the earnings calendar, I can go to the filter. I can type in the name of the company that I want. Let's put Nike. Okay, Nike Incorporated. And there it is. Has all the most recent earnings reports, including the one from this month, December 19th, 2019. You see? Were those numbers better than expected or worse? Worse than expected. EPS, that's earnings per share. That's what the shareholders a lot of times care about, right? The earnings per share. And also the revenue is important. Overall, what's the health of the company? What kind of revenue are they bringing? And so the expected revenue was 10.09. They brought in over 10.3 billion. Okay. The expected forecast earnings per share were 0.58, and they came in at 0.7. So significantly better than expected. Just a week ago, the numbers came in significantly better than expected for Nike's quarterly revenue and earnings per share forecast. Came in better than the forecast for the real numbers. Okay, now let's look at the chart then. If we see, well, that's good news for Nike, right? That's what you'd be thinking. Let's look at the chart and see, is there an opportunistic spot to get in? If there's good news for Nike, we'll keep that in mind, and let's have a look. One thing I like to do is look back another quarter before I get too excited, right? The numbers were better than expected, but were they better than the prior quarter? I want you all to take a look and tell me, look at the prior quarter back in September. Were this month's earnings numbers better or worse than the prior quarter? Just expanding the amount of information we're taking into account before we look at the chart. Yes, the numbers were better than expected this month for Nike, but were they better or worse than last month? Or last quarter, I should say. Yeah, worse, right? Worse. The forecast was that they'd be worse, and they were worse than last quarter, but not as much worse as was expected, right? So that tells you the sentiment going into this earnings season, this quarter, was that Nike wasn't going to blow things out of the water, and the expectation was for numbers to be significantly worse than the prior quarter for both earnings per share and revenue. Now, as it turned out, they weren't as bad as expected, but they were worse than the prior quarter. Okay? That's important to keep in mind as well. Okay, so let's then look at Nike on the chart. Okay, so here's Nike. And we see Nike has climbed over the past weeks. Okay, we're still on the 1 week candles, so up, 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 up. But let's look at the 1 hour candles and get an idea of what has it done most recently. Okay, and so we're going into the 26th right here, right? 12/26. And so since the earnings numbers came in, things have kind of gone sideways. And the day of the earnings, you know what happened? That was this. Right here. Okay? Nike actually dropped the day of the earnings numbers when those numbers came out. Why? Why would they have dropped? The numbers came in better than expected, but were worse than the prior quarter, right? Okay. So, but many people saw that as opportunistic because if you'd have paid attention to when that earnings report was, and we have them listed on our website, you know when the earnings numbers are coming. You could have looked that day and saw, wow, Nike's numbers were better than expected. Still worse than the prior quarter, but better than expected. And so then when you saw this overreaction and Nike dropped because the numbers were worse than the prior quarter, you could have read the tea leaves a little bit and said, hey, that's an opportunistic entry point. Nike just dropped to a support level, right? Support right here, dropped down to the support, stabilized, and you could have said, well, the numbers were better than expected. Maybe I'll take a shot on buying on Nike, right? And look what happened since then. Since those earnings numbers came out, 23rd, 24th, 25th, 26th, Nike's come back up some. That could have probably been expected based on those numbers and the opportunistic movement that occurred right after the first numbers came out. Type OK if you're with me on that. That you don't have to trade on the first move. You can wait, see if the price becomes opportunistic for what you think should happen overall, and then make your move. And so this happens with all the major companies, all the stocks on our platform. This happens quarterly. Quarterly. These numbers are reported. These companies have to report. They're publicly traded. They report their numbers. And so you can use a place like investing.com that I showed you and our website. Remember, I showed you the earnings dates are listed here. We know. Sometimes the date changes, by the way. So double check. Go to investing.com or other locations on the internet, and you can find the dates for the stocks as well. Okay, for the next earnings numbers. We keep them as updated as we can. Sometimes they change by a day or something. Companies move the date on occasion, but you have a general idea of when they're coming out. You'll zero in on it as the date arrives. That's the right date, and you can see the numbers and make a move. So you can start trading stocks along with your FX and your gold and your cryptocurrencies, other things you're trading. And what's nice about stocks, these numbers give you kind of a bigger picture idea of what you think the company will do. You're not trading on something that comes and goes so quickly. These earnings numbers are there until the next quarter. You don't have new earnings numbers for another 3 months, right? If they're doing it quarterly. And so be ready. Have these dates marked down. Check them out as the earnings numbers come in. Look at the initial movements. If you want to trade on the initial movement, by all means, go ahead. You can. If you want to trade on the initial movement and then trade on a secondary movement like we saw with Nike, you can do that. I tend to like to take the information in and then see if I can find something opportunistic to take advantage of with hindsight, already knowing what the numbers were. And then maybe that helps you make a move like we looked at here with Nike coming right up off that support because the numbers indeed were better than expected. Okay, and understanding why it came down. If the numbers were good, why did it come down? Well, likely because they still were worse than the prior quarter, showing contraction, right? All right, so we could look at another one. Let's look maybe Amazon. They recently reported their earnings, and they're on our platform as well. And but by the way, this is one of the advantages with AvaTrade. We have so many stocks. Most brokers don't have stocks like this, individual stocks. We're loaded with them. Probably more companies than you could handle trading on at once. Okay, so if we go to investing.com again, let's pull up then Amazon. Go to the filter. Go back to, let's type Amazon. There's Amazon. And they reported on the 24th, just 3 days ago. Okay, 3 days ago they reported. Their next numbers will come out in February. So let me see here. Oh, I'm sorry, not 3 days ago. This is October's. They're showing October's. They reported at the end of October. Not everyone reports in the same month or at the same time. So this one's a little older. And it'll be interesting to look to see how did it respond after these numbers, because their revenue came in a little better than expected, but their earnings per share were quite a bit below expectation and lower than the prior quarter. Okay, so moving into February, this is one, rather than looking at making a move now, which you could if you like the entry point, but you could be waiting, mark that date down, February 1st. Okay, when the next report comes out. But when we look, okay, October had relatively kind of bad news, little mixed, okay revenue, bad earnings per share. If we then go take a look, what did Amazon do since October? Let's have a look. Oh, that's Apple. Where's Amazon? We'll find it. Here it is. Hashtag AM. Okay. First of all, there's a big jump here, right? That was on the 26th. It opened higher. It opened higher again here. Let's take a look. Let me go back. And we'll take a look at 4-hour candles. And so we see upward momentum right now. Here's a resistance point that it just broke. And again, I didn't have fresh earnings numbers to look at. So we're looking at the momentum now. It's obviously recovered from those bad earnings per share numbers from a quarter back. And there's a lot of upward momentum. Okay. So as we look at the 1-day candles, we can say, where's the next resistance point? And you might say on the chart, we find resistance maybe at the next support, which would have been here, which is where it stopped climbing. This was support right here. Broken support became resistance, and it predictably on this rise stopped here. Okay, so in the short term, you could be looking to see if there'll be a breakthrough or a reversal off this current resistance. And the closer we get to the end of January and the February earnings report date, if that's when it will be, you can start to really make a plan for the next step with Amazon. Okay, so that's something maybe you could make market moves now based on this resistance, either to trade down off of it or wait for a breakthrough. And then also keep yourself updated with the most recent earnings numbers as they come out. And maybe we'll take a look at one more stock before we end things. Maybe Mastercard. Okay, and Mastercard, their last numbers came in better than expected, better than the prior quarter. Look at that, better than expected on both earnings per share and revenue, and better than the last quarter. And the next earnings will be in February also. So that looks like really strong upward momentum potentially based on the prior earnings numbers and leading into the next earnings forecast. Okay, so this is something to keep in mind, is you don't have to look at stocks that only just reported, but also stocks that reported maybe a month or two ago, and you can see based on those numbers and checking the chart if the momentum matches and if you want to go with that. Okay, or if the resistance has been reached. So very important tool to make use of, the earnings numbers. Keep track of when the dates will be. The most recent report dates are listed here on our website for stocks that are on our platform. And as they come in, you see some are in January, some are in February, some are in March. You can have a trading plan ready to go as you see those numbers come in, matching up with the movements on the chart with the technical analysis to find the most opportunistic entry point you can. Like really of the three we looked at, Nike was the best one because it had the most recent report that we saw, And I believe some of these companies have some more recent reports, but looks like investing.com didn't update all of them. But like I said, use more than one website, double check, see what the most recent earnings numbers are, when the next date is. And I think you'll find that you can really have some nice success with stock trading. It's something that I've seen many people do well with. So listen, I think we'll end things here. We've gone on for, I don't know, near 40 minutes or so. Any questions before we end things here? Okay, well, I hope everyone had a good holiday season thus far, and I wish everyone a happy and safe new year as it comes in, and a healthy and prosperous 2020. Hopefully, we're all making nice profits and growing our balances nicely. Be in touch if you need any help in the upcoming webinars. Obviously, I'll be here and be in touch with your account managers as well. If you need any help with the Ava Protect feature, the Alphago app, or anything else that we talked about in today's webinar. All right, thank you all for joining. Bye for now.